Thank you very much indeed. I'm not quite sure how we follow that session, but we'll try our best. We have an eminent panel who are very well qualified to talk about the contribution that the London market can make to the growth of Islamic insurance and reinsurance. If I can introduce the panel, we have Cameron Murray, who is head of UK, Ireland and Middle East and Africa at Lloyd's, and in that role he is responsible for developing and implementing Lloyd's business strategy in those areas. Richard Bishop is well known to us. He's CEO of Cobalt Underwriting, the first Sharia-compliant Lloyd's cover holder in MGA, and Cobalt has been in the vanguard of providing Sharia-compliant commercial insurance in the London market. And finally, we've got Dr. Terry Masters. Terry leads the resolutions group at Benfield, Aon Benfield rather, providing cross-class reinsurance. So I'd like to welcome the panellists up, please. Cameron, if we could start with you. How does Lloyd's, as a significant part of the London market, see the opportunities in this area, and what value add does it bring to bear?
Thank you, Susan. I think I'm going to stay here if that suits you and suits everyone else, if you can hear me at the back. I mean, for Lloyd's, this is as much about necessity as it is for opportunity, I think. We at Lloyd's feel we have to be able to demonstrate our value to businesses and communities around the world who are seeking a Sharia-compliant opportunity. So it's really about a necessity for us. And let me explain why and give you a little bit of the background. We've long recognised at Lloyd's that we can't continue to rely on conventional sources of business if we are to sustain our position as the centre of specialist insurance and reinsurance in the world. And I use the word conventional in its broadest sense. Conventional in terms of markets. I think it's no secret that Lloyd's has traditionally been heavily reliant on the developed markets of the world for its business. Over 70% of our business has traditionally come from the North American and European markets. And in the high growth markets of the world, whether you're looking at Asia, Latin America, Africa, we are underweight. And we are looking to redress that balance and to ensure that our portfolio going forward more truly reflects the way the world's economy is moving. And it's a realism that obviously the world's economy is moving increasingly eastwards and southwards. And our portfolio business needs to accurately reflect that shift, I think. And it's not just about the business we write, it's also about how our market reflects the world economy in terms of the financial capital, where our capital comes from, but also intellectual capital. The fact that our market increasingly should reflect, in terms of the people that work in it, the markets in which we operate. And I think we have a long way to go. And it may be that my chief executive, who's joining us later, will reflect on some of those points as well. But I think we also have to think beyond the conventional in terms of the products that we provide and the way we provide them. Obviously, Lloyd's has a long history of developing and creating and innovative products to meet the specific needs of our customers around the world. And that will continue to be the case as those customers are exposed to increasingly complex and diverse set of risks, particularly in the growth and high growth markets as they become exposed to more sophisticated risks. So for me, coming back to where I started, the provision of Takaful and Re-Takaful products is right at the heart of that strategy. If Lloyd's is going to be serious about expanding into growth markets, we can't limit ourselves to traditional insurance and reinsurance. And we have to make sure that our product recognises the demographic in those markets for us to remain relevant to businesses and communities in those markets. And that's why we've now developed the capability to provide Sharia-compliant products. We're at the start of a journey. We've a long way to go, and I think we have a lot of thinking to do about how we can develop our offering, but we have made a good start, and we've worked with, obviously, Cobalt, with Richard and his team, and various others to come up with a model, the managing general agent model, which is now working. and that's fantastic. But I think, as I say, we have a long way to go. We have more thinking to do about how we can do this. Obviously, the major Islamic economies are, if you like, in the heartland of our emerging growth strategy, what we call Vision 2025. It's Southeast Asia, it's the Middle East, and it's Africa. Our biggest operation outside London is now in Singapore, where we have over 20 Lloyd's businesses operating and over 400 staff working. We are also looking to move into Malaysia, to establish an operation in Malaysia. And it will be obviously very important that those operations can offer, going forward, Sharia-compliant products. I'm sure many of you will be aware that we also launched an underwriting platform in Dubai last year, and the same applies there. I think, it will be very important that in parallel to the conventional reinsurance products that platform provides, that we would look to provide Sharia-compliant products. And then, of course, last year we also launched a strategy for Africa, and considering how we can grow our business and really help to support a number of growing African economies, huge growth across the African continent. And we're focusing initially in East Africa, in Tanzania, in Kenya, where again there are strong Islamic populations looking for Sharia-compliant products. So, yes, we are excited. To answer in a nutshell, Susan, your question, we're excited by the opportunities, but for us there is not a choice. We have to do this if we want to remain relevant to our customers around the world. Just to mention connectivity, I mean, I think the theme of this particular session is connectivity to London and how we can leverage the London market. I guess both Richard and Terry will come onto this in their own ways, but Lloyd's is a broker-driven market. We are the businesses traditionally and will continue to be brought to Lloyd's through brokers. We have a rich and diverse broker community here who also have a long track record of helping to develop innovative products, and we also have developed a good managing general agent model, which again provides good access to the Lloyd's market. I think our market, brokers, underwriters, professional services, will all need to think hard about how we can develop our offering to better support communities and businesses around the world that want a Sharia-compliant product. But conversely, I think developing markets, again, especially, will need to really try to develop deep and rich distribution channels themselves to better network, to better integrate with London. I think that's going to be an important thing moving forward. I'd also mention, I think, that the newly formed Islamic Insurance Association of London can really be a great help in this context. I think it has already done a lot to spread the word, if you like, among Islamic communities around the world, particularly the value that Lloyd's and the London market can bring in terms of developing and providing Sharia-compliant products. But I think conversely also it has a lot to do to bring the message back to London about how we need to adapt our offering to meet the needs of our communities around the world. So I'll stop there and hand over to my colleagues.
Thank you very much, Cameron. Richard, as the first Lloyd's Sharia-compliant cover holder and MGA, can you tell us how easy that journey has been over the last 12 months since we last met in London? And can you tell us what successes have been had and how things are looking now?
Thank you. I'd like to sort of start actually back when we started about 3 years ago and sort of the evolution that has taken place in this market in the time that we've been trying to assist in the development of capacity, because that's principally why we were set up. London has a very deep and diverse capital and expertise base, but it's stuck in London. So therefore, how do we get it out into the greater world? And so when we were approached from, in fact, the scholarly community to try and find a solution that had been elusive to a great number in the industry of how do the Takaful providers of the world access greater capacity, the first question we had to ask is how best to deliver that. And it is over the course of the last 3 years that we've developed the MJ model, which is unique, I think, to the London market and particularly to the Lloyd's market, which gives us access to underwriting expertise and services that perhaps are unique on the planet, and are therefore able to address some of the issues that others have struggled with and come up with a suggested solution. I'm not suggesting that everybody is going to want to access London for every aspect of what is needed. We are principally a commercial marketplace, so therefore the risks that we are most interested in trying to develop solutions for are those in the commercial sector. And I think one of the common themes I find with coming to Takaful conferences is that there is this enormous diversity between the life and savings aspects of Takaful, the personal lines aspects of Takaful, and then of course how does Takaful be relevant to the large commercial exposures that the Islamic finance community is very comfortable in providing finance to. And of course the underwriting response and the model, and we've just heard about how the mutual model works, that may not be most appropriate to the dealing with those kinds of exposures. And one of the successes we've had in the last year is that we've become a Lloyd's cover holder. It's meant that we're able to access the diversity of the underwriters within Lloyd's. It means that we can provide a much greater and broader response to the more specialist risks, the more niche, if you like, exposures that Lloyd's handles so uniquely. And a lot of that is down to the fact that the Lloyd's structure lends itself very well to the structures of the Takaful principles. I'm sure Cameron will be very comfortable in saying, 350 years ago, the foundation of Lloyd's was in the mutualised model that Takaful finds itself founded in as well. So there is a lot of similarity. There is a requirement within our market to constantly evolve and come up with new products. And of course, as Takaful as a market has evolved over the last 30, 40 years, it brings with it new challenges and new needs. And Lloyd's is very well placed to serve that. So we're very pleased that we've now got the capability of delivering that from London. We are the only cover holder at the moment. I'm sure Lloyd's would like to see many more able to deliver their products out into the world. But there has to be a requirement from the other side to buy from London. So therefore we need to make sure that our products are relevant, they are priced appropriately, and that they have a meaningfulness to the markets they're going into. So I think one of the successes I think we've had of the last year is we've now opened up that market. We are able to provide diversity. The challenge for us all is how do we take the expertise and knowledge that we have here and deliver it on the ground, and how does that get through to the buyer? And that is where I think the broking community has a great deal to play because of our model in London being broker-based, but also building relationships with local markets, particularly those that have set out to become hubs, if you like, of the Islamic economy. So we're seeing a lot of interest coming from UAE and from Malaysia, for example, to try and take a lead in promoting the services that London has to offer and working closely with London to develop new solutions.
Terry, I don't know whether you want to pick that up in terms of with an enhanced product range to offer. How do we best get that to the ultimate end user?
Yes, if I may, I think although the title says London market, in the small print it says global. So
okay.
I think that you know, in terms of engaging both the London and the global market, really as we see it, there are two main options. Cover holder MGA, very well served by Richard and Lloyd's, and continue to develop. But also, and I think it was mentioned very early this morning, is the local insurance and then supported by global London reinsurance. Now, I think I heard that there was questions over whether there was sufficient sort of Re-Takaful reinsurance capacity, and I'm sure that, you know, Hanover and all the other global reinsurers would work very well with local markets if they really felt that need was there. And I mean, certainly, I think, you know, with everything you've done on the wording contractual side, Susan, everything Lloyd is doing, everything Richard and from MGAs, you know, we have the capacity to do it. You know, it's getting that need push from the local market, both the clients and the brokers, I think.
And one of the points in our survey this morning that it threw up was brokers aren't necessarily selling the option of Islamic insurance. I didn't know whether that was something that rang true with you.
Yeah, I think one thing that sort of slightly surprising to me hasn't been touched is that I'll use this. I mean, we placed $78 billion of retail premium last year around the world, and this year we're budgeting for that being a significantly lower number, caused really by rate reductions and the competition, I think was mentioned in the last session. So I think the world is concentrating on price currently, price and client value, and the competition is enormous between brokers, between insurers. So I think the value, and I think the last panel and my fellow actuary did it very well, I think, on you know, why technically you should charge more for a Sharia compliant premium than not, has been slightly lost in the global market currently, whilst there is such a premium price war going on. So I think, you know, brokers, and it's no defence, are under, you know, tremendous pressure to get brackets the best, those brackets cheapest transaction for their clients, and so everybody's been concentrating hard on that, and probably not what the options are. No defence, but I think it's you know, you're pretty much across the globe that's happening currently.
Do you think there's a need for more education in the London market of brokers and underwriters in Islamic insurance, and perhaps including it in a CII syllabus?
Definitely, but I don't think that's just a London position. I mean, if I followed your survey correctly, you're saying that actually clients through the Middle East and Malaysia, Indonesia, you know, 25%, I think your number was, felt they weren't being told by the brokers that there might be a Takaful option. So I you know, now that isn't the London brokers, that's our global brokers in the regions not doing that position.
I think there may be, you know, potentially in the Lloyd's market, for example, and more widely, a misunderstanding of the what may seem an overly complicated process that one needs to go through to actually make yourself Sharia compliant. And you know, I think working with Richard and Cobalt from the start, you know, the changes that need to be made aren't necessarily as all-encompassing as might first appear, and I think solutions can be found in fairly neat ways to turn up what is a conventional product into something that meets Sharia needs. So, you know, I think if that message can be conveyed, I think then there may be a greater interest and there may be a greater appetite to play in this area.
Yeah.
I think it's also worth adding that there's a lot of debate about the model that should be used. And as I said, I think different sectors of the market need a different model response. Now, I don't think there's a one-size-fits-all proposition. And if you look at the conventional marketplace, there's not one-size-fits-all. And there has to be appropriate responses for appropriate marketplaces. We don't hide the fact that what we provide from London is based around a windowed response, because that is the only way to provide the depth of capital and the security that is necessary to meet the security criteria of large commercial risks. And until the Takaful industry has been trading for many more years to come, and it builds up the level of capital and reserves that will support that kind of requirement from the international finance community, for example, there has to be an adaptation of the Takaful model into the conventional model. It would be ideal if we could provide a pure Takaful model right from the start, but we can't. It has to evolve over time. And I think that's one of the things that we've seen from the market, both here and when we've had conversations with people in overseas markets. So there's a recognition that London has at least made the effort to develop new solutions to this. They may not be the ideal solution, and we can all debate here about what the ideal solution should be, but I think a little bit of pragmatism has to come into play. The pricing issue is one that is a challenge for everybody. We've tried to work in London on the basis that if we try to fight the pricing battles that are going on at the moment, then there's no chance that this kind of product would gain any traction. So we've got to convince underwriters to perhaps work at a slightly different pricing structure. But then London has so many different pricing structures, it is difficult to know quite where you stop cutting and shutting and working out where one party takes a commission for introducing, another party takes a commission for placing, another one takes a commission for doing this. And all of those things have to be factored into the overall price the customer pays. So the market is adaptable. I think that's the principal message we'd like to give, is that we've got flexible capacity here. But there has to be a recognition as well that unless there is demand, then that capacity won't evolve.
No.
Cameron mentioned that it actually isn't such a leap to make a product Sharia compliant. Can you tell the audience some of the variety of products that you've recently been offering?
Well, the nice thing, of course, based in London, is that we have a regulatory regime that is completely ambivalent to whether something is Sharia or non-Sharia. So that's a very helpful place to start. We also have a law system here that is principally fairly Sharia compliant before we start. So and it makes it very easy for English law contracts to meet the requirements of Sharia. There's some elements that have to change, but principally a policy of indemnity is a policy of indemnity, whether it's Sharia or non-Sharia. That ability to look at the policy from those perspectives means that we can really look at any class. We can deliver a Sharia compliant product for any of the existing indemnity-based products that the market provides. It becomes more of a challenge when you go into the accident and health area, or you go into the life area, and for some of the bond-based responses that some insurers give to the indemnity market. But principally, the vast majority of contracts that are available here in London can be made to be a Sharia compliant product. It's not so much the policy, it's the delivery, and it's making sure that the processes that sit behind the contract, the insurer is following the correct response that is required by being Sharia compliant. And that is, I think, where working with Lloyd's, for example, has been, let's work out how it should be done, and then it becomes available to all. It then becomes a scalable solution. So we've developed products, for example, as diverse as equine political violence. We're working on aviation. We started in property. We've done casualty for a large investment here, an inward investment from the Middle East into the UK economy. We've managed to provide environmental impairment liability. So there's a lot that can be done, and we don't just limit ourselves to fire and perils.
Terry, have you got a view on the product range?
Well, yeah. In addition to the points that Richard's made, and I think with Lloyd's opening in Dubai and the IAL, so the publicity in general, there are several other MGAs who are, shall I say, in the early days. I'm going to say this quietly with Cameron 2 seats away. In the early days of investigating whether what they need to do to become Lloyd's cover holders as well. So I think that there's definitely momentum led by Cobalt on that basis, and I suppose they tend to be regional entities. Now, will they get there? Don't know, but I certainly think there's a lot of discussion going on about how to take this forward.
And one of the themes of the conference has been the gap between those that use Islamic finance and then use Takaful. And it's striking that a number of projects are Islamically financed, but they're not Islamically insured. Do you see any way to close that gap?
I think we those of us that were in Dubai last autumn, I think had a bit of discussion on this, and we didn't all agree, did we, Richard? But I think that regulatory requirements and especially client Sharia boards could well be asking, look, is there a Takaful answer here? Yes, the brokers can, without doubt, offer more if they think they can at a price that they think the client will buy. But I think from your survey, the reason why people weren't, I think were very much the correct reasons from what we've seen.
I think it's also worth mentioning that in the last year, for example, we've seen a very strong take-up of interest from a number of territories around the world. A notable example would be Pakistan, for example, that has, I think, introduced new legislation to allow the operation of Takaful windows. So therefore they're looking out into the world and looking for Re-Takaful solutions. The problem for them is that they have an expectation of pricing that our market is finding very difficult to deal with. And it come, I suppose, as no surprise that if you have a market that is geared at providing capacity with a very high degree of security rating, that comes at a premium price, and therefore for risks that don't necessarily require that kind of security in the reinsurance, pricing is going to be even more of a challenge than it is in a highly competitive premium market anyway. So it's very difficult for us to necessarily match desire for a solution with the ability to actually provide a practical solution at a price that is acceptable.
I mean, going back to demand, do you think there's more that governments can do, particularly with government-backed projects?
Possibly. I think we have certainly seen an interest in certain government projects looking for more Sharia in collaboration with, for example, our own government, as we provide our expertise in engineering, for example, into other parts of the world. But there's also an education here. I'm not sure necessarily that it's widely known that London has the capability to deliver the capacity that's needed for some of these large infrastructure projects. So that's all about the education piece.
Indeed. I'd like to throw it out to the floor and see if there are any questions for our panel.
No, I was saying that I attended, your launching ceremony in Dubai, and really it was something, for the region. I think it was something very important. My question, and I'm always, skeptical, because people are very happy, etc. And and we know that Middle East market are very competitive, and as explained by Richard, people expectation are different from, let's say, market expectation in Europe. My question to you is, don't you think that you are bringing more competition to a very competitive market? And how can you really make your operation sustainable? How can your operation, be successful if you have to compete with the existing player, being regional or international? This is my question to Cameron. If you allow me a question, to Richard. In fact, we had at least, 1 or 2 meetings, and I was following what you are doing. The message I'm receiving, from Cobalt is you are a Sharia compliant region. Every time, we are talking to you or trying, to approach you for a business, always we have this answer, it has to be Sharia compliant, it has to be Sharia compliant. But now you are saying that you are acting or you are operating as a window, which is for me, it's more clear. But I think I'm following, what's happening in the market. But the way I was perceiving Cobalt, it was something very strict when it comes to Sharia. And my humble opinion when it comes to, let's say, being very strict, with the Sharia compliance or very strict with the Re-Takaful, there is not enough volume to make an operation sustainable. And therefore, when promoting, Cobalt, you should be aware that maybe the Sharia compliant part of your business or the Re-Takaful part of your business, it's something which will be, let's say, 10%, 15, 20%, but it will not exceed this level. The more conventional business you have, the more you have the chance or the possibility, to make your operation sustainable. I don't know if I'm clear, about what
I understand.
Cameron?
Yeah, first. Thank you for your question. I'm not sure it goes beyond pure the Takaful conversation, but it was a question that was asked of us many times when we set up in Dubai. This is a crowded marketplace. You're bringing more capacity when it's not needed. How sustainable is that model? Just as you asked. Two things I'd say. First of all, we invariably are asked that question when we establish local operations. This is not London. You need to price accordingly to local market conditions. There are different expectations about how much you're going to pay for a product. We recognise that, of course, and we have to balance the need to meet those local conditions, those local expectations, with pretty strict underwriting standards that we have that are targeted very much at sustainable, profitable underwriting. It's a challenge, and whichever particularly high growth markets you're looking at, it's pretty much a very tough rating, price driven market, whether it's Dubai, whether it's Turkey, whether it's India. We always have that challenge, and it's very difficult, and I don't think there's a set answer, but we try to, as I say, strike the balance between meeting local expectations and underwriting profitable business. The second thing I'd say is that the businesses that have established, some Lloyd's businesses have been in Dubai for some time, in the DIFC. Those that have set up have taken a decision. We've not said, right, Lloyd's is setting up a platform in Dubai, you now all need to come out and start selling products. The businesses that have gone to Dubai have gone because they have seen a commercial opportunity. They've seen perhaps a niche where they think they can add value, that they're not necessarily going to be competing so much for price with a whole host of other local players. They've targeted particular classes of business, and they've gone in very small and focused on that class of business. Now, they may still find it difficult to price accordingly, but so far they seem to be doing okay. But I think you're right, time will tell about how successful the model is, but I think because we're starting small, if you compare to how we went into Singapore 20 odd years ago, a lot of our businesses went in and tried to sell, to be everything to everyone, sell a range of different products. But I think we've learnt the lesson from that. So that is why we're starting very limited number of classes, very small operations, and hopefully grow organically over time, and only then expand to other classes of business. But it's a very pertinent question, and I think time will tell.
So, Susan, can I help Cameron out here?
Please do.
Did I do that? I thought I did very well.
Of the $78 billion premium that I mentioned earlier, that just we deal with, the percentage that comes to London is relatively small and has been getting smaller over the years as not as an amount, but as a percentage of the total. As our first speaker mentioned this morning, London is an expensive place to come to, and it's an expensive place to do business. And for the business to reach Lloyd's or anywhere else in London, it passes through extra pairs of hands, which costs more money. So the world's insurers and reinsurers have increase their distribution, and so that they couldn't see the business locally because it may not always come to London. And actually, if you look at the cost of doing business in any region, it doesn't, from that point of view, it's often much cheaper than sitting in London and hoping that the business reaches you here. So it's a a strategy that in Aon certainly we absolutely understand.
Now, the comments you made, Shakib, I don't know whether it's to help me or to hinder me, but I'm going to try and use it as a help. Yeah, I know. I'm.
Your communication. Honestly, my colleagues, every time I'm talking to them about Cobalt, don't know if you are doing commercial or
I'm not here necessarily to promote me and me alone. The model has been the model that has had to adapt in order to be able to work within the London market. So the use of the deep capacity that we get from the insurers and the syndicates that we work with is a response to the need for capacity that is for large commercial and complex risk. So I'll leave it at there. But you made a very valid point, which is about the mix of the business that we are looking for. We don't ask our customers whether they are Sharia compliant or not. Yes, we want a good proportion to want to buy because they are Sharia compliant. But actually, because we are Sharia compliant, all our products are Sharia compliant because our capacity has been structured to be Sharia compliant. The London capacity that we're working with is Sharia compliant. But that is open to anybody. And that is the important opportunity for everybody sitting in this room that's involved in the Takaful industry, is that by focusing just on those that are asking for Sharia, you're narrowing your market from the whole world to a proportion of the world. And therefore, I would say that by structuring yourself so that you can provide Sharia compliance, there's the opportunity.
I was going to ask a question which in a way you've answered, but I wondered if it's possible for you to, that's you, Richard, you mentioned EMJ, the product that you took 3 years in developing. If you could just explain, what that product is, why you're unique.
The MGA.
Oh, MGA, sorry.
Yeah.
I heard it wrong.
The MGA is the Managing General Agent. It's a
Terminology that I think we inherited from the Americans. In London, we've always had entities called underwriting agencies, which everybody sort of understood, and then the Americans came along and changed it all. We are here to distribute capacity on behalf of several insurers and syndicates on a delegated basis. And it's the Lloyd's cover holder model which has worked very successfully over the years, and Cameron can tell you how many they've got now. It's a very large number, and it is something where this is granted to people not just in London but all over the world, and it is a distribution model that works very well. It's very akin, I suppose, in what we do. We take on some of the responsibilities of the Takaful operator, so we are sharing the responsibilities of making sure that the whole process is kept Sharia compliant in conjunction with the insurer, not just delegating it to them completely. So it's a very unique model, but it's a very effective model for the London market.
Can I add to that? Thank you. Yeah, just to add to what Richard's saying, it's a system where, if you put it in a Lloyd's context, the underwriting, the syndicates at Lloyd's will delegate their underwriting authority, or give the pen away, as we say it, to local, trusted intermediaries, agents in local markets. It could be in the UK, it could be in Dubai, it could be anywhere in the world. 25 to 30% of Lloyd's business internationally comes through that route. And for the client, what it means is they are dealing with someone in a local time zone, if language is an issue, in their local language that they know and they trust. But that local intermediary, that agent, has the benefit of the underwriting expertise that comes from London, plus, obviously, Lloyd's rated paper and financial security.
I see another question over here.
Yeah, thank you. Richard, you mentioned a few times the pricing issue, and I think you're touching on probably a very critical technical aspect, which, for my benefit and probably for the benefit of the audience here from a Takaful perspective, what that means, especially in the context of a fund that is Takaful, where pricing is probably based on pure premium, i.e. there is no risk transfer, technically per se, to the shareholders. You bring it to Lloyd's, where you're backed by the different syndicates, and it's a completely different model from a pricing perspective, where risk transfer to the shareholders is factored in, and it breaks the model from a Takaful concept. How do you reconcile that?
I think I should probably actually give that to Terry, because he probably understands it better than I do. The different pricing models that operate across the market, each insurer and syndicate makes its own assessment of risk. So the first question I would always ask is, what is the correct price for a risk? And I think if you ask an actuary that, you'll get 3 answers. Really, it's what's commercially acceptable, and therefore the margins that you build in, whether it is for the cost of your management, the cost of the provision of capital, just the providing of the structure of an insurance vehicle, all of those things affect ultimately the profitability that you end up creating from the transaction. And so you can argue that technically, and I'm sure every actuary in the room will say that Takaful should carry a premium over conventional. I'm not necessarily convinced that that translates in practice to the end price of protection, and therefore it's very easy to debate it in theory, but whether there's a practical answer to your question, I don't know.
I think I would say, I'm not sure I heard the whole question there exactly, but probably from Richard's comment that pricing, however much the actuaries may decide that you can come up with a technical price, within a market, and I'd say that's especially true in a London market, relates to a whole range of things. What else have you got in your portfolio? What other risks are you being offered at the same time? How does your reinsurance program work? So what's your gross to net position? How much capital are you running against that? What's your expense ratio? So that actually, that's almost a fixed cost. So a whole range of things. And I guess one of the advantages of London as a global centre is that the underwriters sitting in Cameron's establishment, you know, are working for organisations that do look at the whole world. So, you know, that there are prices for business in the Middle East which might be quite different for a price in New York and different again for a price in Santiago. So, you know, they have a balancing act to compete for that. The other thing, and I guess I you know, although I put the actuarial argument earlier, I mean, in the current pricing position that I think that the world sees itself from insurance, I mean, you know, people are generally making reasonable profits from low prices simply because there haven't been some of the claims in the world to reduce those returns. But, you know, you know, there are some definitely discrepancies from the capital providers now. Some are only looking at, you know, 6 or 7% returns across a period. Others are still at 15, and then the wonderful, you know, Takaful Malaysia returns that we saw earlier. So I think generally the capital is understanding that the returns may be not that the double digits they always used to expect, especially in a low interest environment that we live in today. So in a way, you know, it ought to make it easier for Takaful pricing to be acceptable to people if the Takaful have to charge the same price as the conventional.
Any other questions for the panel? Yes, Mohammed. Is there a microphone, please?
Another misconception now we have heard, and it's been asked from the floor as well, that the Takaful prices has to be higher than the conventional. Technically, and we've been working with actuary even from the early 2000. The technical pricing has nothing to do with the product being Takaful or not Takaful. And I think Cameron mentioned the right word, which we interpret wrong, or we call it conflict of interest. It's a challenge. So the challenge for managing a Takaful operation is to align the interest of the shareholders and the policyholders. So to get the prices right, it has to be, because Takaful why should I buy? And we heard today from Dr. Siri Muhammad Hassan that it has to be an added value. It has to be a benefit, regardless whether it's a Sharia compliant or non-Sharia compliant. But it is an added value, or it's a plus if it is a Sharia compliant for someone who's observed the Sharia. But the prices shouldn't be any different at all between Takaful and non-Takaful. The issue of the interest of the shareholders versus participants, again, it's a challenge. It is up to the management to strike the balance between both. No one actually goes into business just for charity or not to make a profit. It has to be profitable. And the price, usually, it is a challenge for the management to control the cost in order to reduce the price to make the product competitive. And actually, at the end, is working according to data, according to assumptions, which he derives from his experience as well as from the management or the product specification given to him. So Sharia issue shouldn't be an added cost to the product. Thank you.
Thank you for that. We'll take one more question before we finish.
Thank you. I have a question to the panel. I'd like to try to ask which product carries the bigger risk actually. Is it the conventional insurance or Takaful? I mean, talking about business-wise. If I'm want to start a new business, for me the conventional and the Islamic insurance are the same. But I'm looking from the profit point of view. Which one carries actually higher risk? Is it the Takaful or the conventional insurance?
Well, I think if the insurer has handled the business in the appropriate way, then that shouldn't be a question. The product that you receive is either a secure product or a non-secure product, and if it's not secure, you shouldn't buy it. So it really comes down to making sure that if you are in the insurance business, and whether you are a Takaful or whether you're a conventional, your product has to be the best if you want to rely on it being sold. You shouldn't rely on it being Sharia to sell it. It must always be a quality product. That's the answer.
I think that's a very good note to end on. Thank you very much indeed. I'd like to thank the panel for their valuable insights, and if you show your appreciation in the usual way for them. Thank you very much.